What if I told you that with every daily candle open, the market has a 98% chance of making this one exact candle pattern? I'm not here to sell you a strategy today, I'm literally just here to show you this pattern and exactly how you can use it in your own trading every single day, because it's extremely simple and it saved me from countless losses, and I think becoming profitable would have been a whole lot harder without it. But I'm not trying to waste any of your time, so let's get straight onto TradingView so I can show you some real-time examples, and then I'll show you exactly how you can implement this into your own trading every single day at the market. So as you can see, I'm on the daily time frame here. I'm going to be using a real example from last week, but getting straight into things, as you can see, almost every single candle on the daily time frame has a top and bottom wick. We can zoom in, we can even go on to a different market. I have a lot of real live examples on here, but you can see every single candle pretty much has a top and bottom wick. But that is like the most normal market behavior ever. Literally every market creates upper and lower wicks. So what? Well, have you ever wondered why it's so rare for candles to open and then just go straight up without creating a bottom wick? Or vice versa, candles going down without creating a top wick? This doesn't look natural. Price just doesn't really do this. In fact, it's just a 2% chance that price doesn't create this upper wick before then moving down. And this isn't just by random, there's a good reason for it. Price actually purposefully wicks in one direction in order to just fill orders and allow big institutions to enter their positions. So when a candle opens, it will create this bottom wick before then going up. And obviously a single daily time frame candle is going to be a lot of movement. So in just one wick, this is filling in so many institutional orders, and this brings a lot of momentum to the upside. But on top of that, back to the most basic concepts of the market, price is just hunting liquidity, and then it begins to move in its intended direction. So this candle is taking so much liquidity before it then moves bullish. Or we can have a bearish example. We create that top wick and then move down. And in this top wick alone, this is likely maybe 50 pips, and that has taken out so much liquidity alone in itself. And when you mix this with the fact that investors have now got a great price to sell at, or institutions have now filled their orders properly, this brings a lot of momentum to the downside, so price can fully go in its original intended direction. And finally, price is just filling in imbalances. So a lot of the time there are just massive drops in the market, and price is just filling in fair value gaps because the price always needs to equal out at some point. But in live markets, you're seeing the candle's entire formation, so you can see when it does or doesn't have top and bottom wicks, and we can really use that to our advantage because we know where price is likely going to go next. So on occasion, we'll see it where a new daily candle has just come up very strongly without creating a bottom wick. So we know there's a lot of liquidity down here. We know there's a lot of orders that are yet to be filled. So if we scale down to another time frame, this doesn't really matter too much. It can be any time frame. If there's no daily bottom wick, then every time frame is pretty much going to shoot towards creating that wick, and you'll see this happen very consistently. So if we then scale down to our preferred time frame, for me, I trade the 30-minute and the 5-minute, but for this example, we've got one on the 30-minute. And we can see this is exactly where the new daily time frame opened. You can see it goes from Friday to Sunday evening. Okay, so this is where it opens back up. Now I'm going to be using an example with my strategy, but this will work with any strategy you trade. So if you're going to take a short position, then having no daily bottom wick will be a massive benefit. Personally, I trade my own LSD model. It utilizes liquidity, supply and demand. Very simple stuff. We love using the proven basics over here. But with this knowledge that we now have, say you have your entry point, wherever this may be, once again, this is fine for any strategy, you can now easily target this bottom wick creation or a lot further, because we know it's likely targeting some levels of liquidity down here, and price will pretty much always just run straight towards that. Okay, obviously you need to implement your strategy into it as well. You can't just sell wherever because we don't have a daily bottom wick, but it is an incredible confluence towards taking a setup. And vice versa, say we had a demand setup going on here, aka a buy example, such as right here. This is actually a decent setup for us, to be honest, but we would not be taking this, and we could avoid a very clear loss because we know we don't have a bottom wick on the daily time frame. We know price is going to shoot towards that to fill in a lot of orders and take a lot of liquidity, even though we are extremely bullish. You can see we are so bullish overall, and yet price still reacted so strongly off a sell position compared to a buy position because we had no daily time frame wick. And because we had no wick there, it's kind of proving that price's intended direction is going bearish. And you can really take advantage of this and get some massive risk rewards. I believe this actually continued pretty much just going bearish by the end. Yeah, you can see it's literally just been a bearish market ever since. And that is a beautiful indicator to tell us that we are going bearish from a much earlier point, because we took all the orders from the upside, we filled in so many positions, we got so much momentum to go down, and you can take a crazy opportunity with this by going for an insane risk to reward. Personally, I already trade a crazy risk to reward strategy. If you are interested in learning my strategy, then I literally have a free playbook in the description. There's no strings attached. Just if you want to learn it, then it's there. Having a confluence like this increases our risk to reward even threefold more. I'll find another example for you so you can see exactly how it works. But yeah, this is a perfect live example of one that I actually took in live markets. This one looks a little bit weird because markets gapped pretty massively here, but you can see this goes from Friday to Sunday. Once again, that is a new daily time frame candle open. I mean, in this case, it's also going to be a new weekly time frame candle open, but we're just looking at the daily for this. But you can see it immediately came up with no bottom wick, and it is beginning to fill all the orders from the upside. And the perfect place to do it, for us at least, is at a supply zone. For you, this might be an inverse fair value gap. It might be whatever strategy you trade. But as soon as you reach that zone, that can be the turning point of when it starts looking to fill in all the orders on the downside. And you can see this really was just coming up to bring momentum to go down, because we absolutely dropped. But yeah, this was actually a setup that I took in the live markets. I took this for a 1 to 10, and you can just take this to fill in that bottom wick. And a lot of the time, this will be a ridiculous risk to reward. I can keep saying it over and over again. Price is literally just coming up here to fill in orders, to take liquidity, which in this case is this level right here. This is the liquidity in front of our supply and demand zones. Once again, liquidity, supply and demand is my strategy, so it works quite perfectly. But if it takes literally any higher at all, it is then likely going to push down massively. And if you can predict this from the earliest point, because you have the knowledge of this, which most people do not, nobody ever talks about this. This is literally specifically in mine and just the liquidity supply and demand community. I don't know why, but it's such a strong confluence that works with everything, and just having the knowledge behind exactly why it works and how you can utilize it is the strongest thing ever. But I've also had many situations before where I've avoided losses because of this. So I'm taking way bigger wins, my win rate is improving, and I'm avoiding a bunch of losses. For example, in a situation like this where we might have a demand zone but we have no daily bottom wick down here, price might give a fake out from your zone, because there's still going to be investors there that aren't thinking about that. There's still people that aren't aware of it, so there's still going to always be buyers at those zones, especially when we're taking a level of liquidity. I didn't draw it in this example, but we'll give a fake out and then price will just come absolutely crashing down to fill in this weekly wick, and then usually it will continue in that direction because that's the intended direction. We've just taken all the liquidity, filled in all the orders, done everything else we need to really do up here, and then it moves in its real direction. Even if we looked bullish beforehand, this can be an indicator that we are going bearish from a very early point. So once again, if there was some kind of supply zone up here, this is actually more of an indicator to take the supply rather than taking this demand. I hope that made sense, because it felt like I was saying a lot. But that's about it for this video. I think that this can provide a lot of value to a lot of people. Go check out the freebie in the description if you want to learn the strategy. We provide all the free value out here, showing all the real results. You know how it is. But that's about it for this one. Yeah, subscribe, like, comment, and I'll see you in the next one. Peace.